On YouTube. All right, so let's get back into our backtesting session. So what do I see? Always start from my top-down analysis. What is price doing here on the monthly? We kind of left a failure swing to this. Okay, we created an SMT with previous monthly high. So there's an SMT at the highs on the monthly chart. What do I see here? I see NAS. Wait, did we tap into this? No, we didn't. So we look failure swing to this high. I'm anticipating price to go from IRL to ERL. So this kind of becomes my next draw on liquidity here. Let me see what the hourly chart, so we are tapping into a weekly chart, right? Or I mean a weekly for value gap, sorry. Now I do think price just wants to inverse this and just continue lower. Just because of the significant closure in the SMT at the highs. Like it doesn't really make sense for us to continue off this SMT. Right, especially when we go from IRL to ERL. So I mean, I'd want to see how we react off this gap. But me personally, right, I want to see how NAS reacts and goes to this low. So what are we today? It's April 13th today, right? So you can clearly see we're respecting bullish PD arrays, and I think we had an internal SMT. No, we didn't. But we create these gaps here. Yeah, I mean, my draw on liquidity is lower at this point to this monthly ERL. We have no SMTs. We had an SMT up here. Nah. Okay, so pretty much this is a Wednesday. I'd want to see the 4-hour candle, so that's 6 a.m. right there. We get this nice wick. Yesterday we distribute any SMTs at the highs. No SMTs. Maybe with this high here. Yeah, so no, there was no SMT there. So honestly, I just want to see how this 6 a.m. candle closes. It's not looking that great here. Equal highs up there. Price just looks like it's chopping around. We go to the hourly chart, see what price is doing. And that's at 1 and 2 a.m. Tapping this gap kind of. Don't really see an SMT anywhere. Skip forward to 9 a.m. That's 8 a.m. That's 9 a.m. There's a 1 hour gap here. No SMT at the lows. Do we make an SMT at the highs? Yeah, we do. So SMT at the highs here internally. We leave a failure swing to this liquidity here, which is also previously a low. Now we might sweep out this high. I just want to see. We have that gap as well. Now this is going to the 10 a.m. candle. I want to see how we respect this. We tap that 1 minute. So honestly, this would be a nice trade here. Right, me personally, I'm not going to take it. I mean, I could take it. We do tap in that 15-minute gap. Is there an SMT at the lows? We can see. I got this gap. All right, so we open the 10 a.m. candle. We tap into this 15-minute gap. Pretty much, like this is an SMT protected high, so it is a little, it is a little difficult here. We can go if we see if we have any internal SMT. Not ES is much weaker in the range. It also closes bearish, I think. Do we form a PSP there? No, we don't. But ES is much lower, kind of wicks. We do tap in that 15-minute assist area as well on ES. Tapping into the area. Internal SMT at the highs. It's a little tough here. I'd probably just be patient. Do you have any SMT below these lows? Or this low? See? No SMT. I mean, NASDAQ, it looks like it wants to expand here, possibly. Like, you could take this to this high. Me, personally, I'm just going to be patient. It does play out, but, I'm just being patient here. Let's see if we leave a... So we sweep all this London liquidity. ES is so weak here. Wow, that's actually insane. ES is really weak here. So I could still look to form a short here. Look how weak ES is, like completely weak. We see all those London highs, and we might want that before we continue lower, right? If we get an inversion of this 5 minute, I'll take it. I want to see how ES is pushing. Even a candle body closure here would be amazing. Like look at the, so we have external SMT with this high. I have internal SMT with that London session high as well. Or yeah, above here. This high internal and then another internal. ES looks really weak. See the next candle. I want to see a significant closure below. Or are we just going to continue higher? That's ES. So I guess we don't get that reversal. It's kind of weird how, I mean, we do tap in that 15-minute gap again, I think. No, we don't. I mean, I guess I probably would have taken that. It's hard to say. I probably would just be patient here. Just move on to the next day. No point. But that would be the model there. I was just a little hesitant. Which day are we looking at? I just picked off from where we stopped out last week. Sorry, I just saw your message. You know how we stopped off last week. We're just gonna continue here. From last week's backtesting session, just in 2022. So yeah. I mean, right now, what do I see? We tap into this small internal range of liquidity. I want to see if we react off this. Yes, forms an SMT from what I see here to this high. Now I wonder if we go up there and tap into it. At this point, we do get an hourly SysD here. It is 9:30 though. This is our SysD level. I want to see if do we have any. We do kind of wick off this area here. I'm gonna mark out the discount and because we do have liquid. I mean, like I mentioned, my drawn liquidity is still bearish. It doesn't really make sense for price to flip here. Let's just quickly mark out. Can you go slower? Yes. 1 second. My apologies. Think this should be good. Change this to red. So yeah, so pretty much I'll go slower here. My apologies. I'm getting a little ahead of myself. So we tap into this weekly fair value gap, this weekly internal. It seems like we're kind of reacting off of it. It is a Thursday. Now, ideally, I want price to continue lower, right, into this monthly low because we have that monthly SMT. Now, if we continue higher, I mean, I'd want to see that confirmation of that reversal because, I mean, on the higher time frame, we are kind of, we have been downtrending lower, right, on the weekly time frame, and this is the weekly candle. So over here, to initiate the reversal, I need to see an SMT on the weekly chart, which I don't really see at the moment. Oh, no. So we do have an SMT to the lows, actually. Okay, that's interesting. I didn't see that before. So we do have an SMT here, which could qualify for a reversal if we respect this weekly PD array. So if we respect this gap, I'd assume price to target these highs up here because we have that SMT at the lows. SysD. Now we do have that monthly SMT, which is kind of throwing me off, and I kind of expect price to continue lower. Just into a possible, I just want to see if I can't do that. But just with the SMT, it's just not looking really good. You can clearly see ES takes it out. But it is a pretty nice closure. On the lower time frame, we just have to be patient. See the daily chart here. We have that SMT on that daily candle like I mentioned. See, NASDAQ taps into this high. ES does not tap into that high. So I wonder if that holds any significance here. We got onto the 4-hour chart. I want to see how price reacts to this 50% of the range, this equilibrium of the range. Just because we have that previous day high SMT, so I'd expect price to have a deeper retracement into this 4-hour internal, right? Because we swept out the external. Yes, should tap into this as well. There's that change in state of delivery here. So this is 9:30 here. You can go to the hourly chart. What does price do? We also have these gaps in here. This gap, we have this hourly gap that we're kind of reacting off of all of, 4, 5, 6, 7, 8 a.m. So we do have an SMT with a 6 a.m. high, the swing point. Or a 7 a.m. high. So I'm just going to let the first 15 minutes of this open play out. So we just dump. It's kind of hard to catch that, I guess. 5 minutes SD. We have an SMT at the highs, most likely. Yep. We left equal high. No, we swept it out. But it's kind of relative equal highs. But that SMT, of course, qualifies for a push lower. So we do respect that daily for value gap there. I want to see if we can find a nice entry. See the S&P. Like I'm expecting the 4-hour candles to distribute lower at this point. We do leave equal highs. It's just kind of like I feel like positioning yourselves pre 10 a.m. here would be the better call, which I think probably is what happens here. I'll just wait for 10 a.m. I guess. The 10 a.m. candle opens up. I want to see if we can tap into this 15-minute gap here. Now, we might be forming SMT. I guess we just dump. I think I'm going too fast. I gotta like slow it down. I actually look for the entries. That's the thing about backtesting, right? That 15-minute SIST level was actually good as well. And this is like a good time to position yourselves before 10 a.m. because you're anticipating 10 a.m. to just distribute, right? Because the SMT is created on this candle. So what's the 10 a.m. candle going to do? It'll come up, but I mean, you're not expecting this high to be taken out, right? So when we're trading a 10 a.m. reversal, we'd expect the 10 a.m. candle to form that external SMT. When we're trading a 10 a.m. continuation, expecting price to distribute lower, and we can tell, what the 10 a.m. candle is going to do. Is it going to reversal? Is it going to have a reversal, or is it going to continue based off what the 6 a.m. candle does, right? So we form the 6 a.m. candle SMT, and so that should be the high of the day, right? So there's no real point for price to reverse like this. So this 10 a.m. candle then becomes a continuation candle, and then you can pretty much enter, before 10 a.m. or even after 10 a.m. It doesn't really matter. But the shorts become very clear when the 6 a.m. candle has that continuation. I mean, Nasdaq is way lower in the range. This is previous day low here. I wonder if we see previous day low. We have this 1 minute. I want to see. See this here. We forming any SMTs. We do have an internal SMT inside of this 5-minute gap. I want to see if we can get a significant closure below this low here. I just need a closure below that low. Do we get that for the continuation? And then, of course, we just dump here. I tap my limit here. See if we get tapped into. If not, I guess it just runs off without us. What's the rule for 6 a.m. and 10 a.m.? So pretty much, right? In the framework, let me explain it. So in the framework of the higher time frame, right? As we know, we're pretty much trading swing points. So what is a swing point? A swing point is just, when a candle does this and then just an external range of liquidity. Now, in order for price to reverse, we need to see an SMT at that swing point. So whenever you see the series of 4-hour candles Um, how do I explain this in a way where it's not too confusing? Trying to think. So the way people teach it, right? They teach it by calling it CRT. You know, I personally don't call it that. It's just a way to make it confusing, but I can explain it, and I have a video on this, but so let's do this. Let's do this. I have an idea. So how I like to explain this is by dividing the three candles, right, into three different parts. So I name one candle, right, the accumulation candle, right? And this what people call it. The people call this the accumulation, or I mean, sorry, the candle one, right? You might have heard people say candle one, candle two, and then candle three. So let's say for me, this is the accumulation candle, which is candle one, and I'll just name this candle one. Candle two, right, is going to be the manipulation candle. We can do this manipulation candle. Right, so we manipulate this accumulation high, or the candle one. This is going to be the accumulation or the manipulation candle, and this will be candle two. Now this is a little advanced because you're trading specifically swing points. I'm going to try to explain it the best I possibly can, right, in a very, very simple way, with like how I'm teaching a beginner. Not like a beginner, but just like, because everything is so connected, I'm going to try explain it in a way that you don't need everything, right? I'm just going to try teaching it in a way where you can just learn it by itself. So this would be candle two, where it would be the manipulation candle, right? Because why would it be the manipulation candle? Because we take out the accumulation high, and this would ideally have some SMT at the highs, right? So SMT at the highs. So the candle two pretty much takes out the accumulation candles high and forms an SMT, right? So on one asset, it's going to look like this. And then on the other asset, it'll look something like this. This candle closes like this, and one candle closes like this, right? And the third candle that opens up is going to be the candle three, which is going to be the distribution candle. And what does this do? This targets this candle's low and beyond. So you can kind of see how price does this a lot. And there's two situations for this, right? Two situations. Now, me personally, this is my favorite situation. When the candle 2, so let's say the 6 a.m. candle manipulates the 2 a.m. candle's high, forms an SMT, right, with this high. What do you expect the 10 a.m. candle to do? Open up, accumulate, manipulate, and then distribute, right? And that's where the 10 a.m. candle, that's where the 10 a.m. power of 3 comes into play, right? Because on the higher time frame, we have that mini reversal condition right there, right, forming the high of day. And what does the 10 a.m. power of 3 allow us to do? It allows us to engage with this second stage of distribution, right? I know you learned the market maker models, right, on Q, where the 10 a.m. power of 3 just acts as a second stage of distribution, right, to this higher time frame MMXM starting, right? And what I mean here is, think about it. This candle closes like this, right? It forms a 15-minute for value gap, 1 hour for value gap, something like that, right? And it forms that inefficiency. So what does price do? It opens up at 10 a.m., accumulates, manipulates into, this candle's inefficiency, and then we get that distribution lower. And this is how the 10 a.m. power of 3 functions, right? Now, this is a continuation of the 10 a.m. power of 3, right, where we tap into that, inefficiency, that fair value gap. Let me just mark it out here. We tap into this fair value gap here. Let me just do this real quick. We tap into, let's say, a lower time frame fair value gap here, right? 15 minute, and then we get a change in the state. We take that and then boom, right? So that's one of the scenarios, right, where the 6 a.m. candle creates the high of day. And then, of course, there's the other scenario where the 10 a.m. candle creates the high of day, where it manipulates both of these, right? And then it pushes lower, right? So pretty much just the same thing where the 6 a.m. candle just stays in that range, right? Or it creates its own range, but it doesn't have any SMT or any significant closure. It takes out this and this. But because there's no SMT at the lows or anything, we'd wait for the 10 a.m. candle to form that, that high or low of day, right? So at that point, the 10 a.m. candle opens up. Then we manipulate that external high, have some sort of SMT up here, right? Well, let's say ES makes a lower low, while the 10 a.m. candle makes a higher high, right? And then we get that reversal. So a price accumulates, manipulates, then distributes, right? Taking out the external high. And this is when we expect, so this would be your candle one, then this would be your candle two. And then in a scenario like this, right, where the 10 a.m. candle might not fully go all the way to the drawn liquidity, you can expect the 2 p.m. candle to have the highest probability day, right? Where the 2 p.m. candle then becomes a candle 3. Like it kind of makes sense, right? You just pretty much let me just mark this out, and maybe I'll name the candles here. 2 a.m., 6 a.m., 10 a.m., right? So the 10 a.m. candle becomes the candle, quote unquote, 2, because that's the high of day which manipulated, right? So it's whatever candle that manipulates the accumulatory candle, right, with SMT. Now, a question you probably have is, when the 6 a.m. candle takes the 2 a.m. high, how do we know that that's not the high of day? Now, I need everybody who watches this video, everybody who's in the call, to understand a confirmation is needed before you can make an assumption. Now, I can't say, right, a candle 2 has been put in, or a manipulation has been put in, without seeing what are 3 reversal conditions. Now, that's what I'm programmed to think of, right? I always need to see a higher time frame for value gap or ERL, right? I always need to see that. I need to see an SMT, right? And then I need to see a lower time frame aligned CISD, right? And these 3 things must be seen before you can actually confirm, right, that the candle is actually a manipulation candle, and then we start the distribution phase. This candle right here had no SMT, right? It didn't even tap into a higher time frame for value gap, let alone had a change in the state delivery. So how can you be sure that this is the candle 2, and how can you be confident that, the 10 a.m. candle is just going to distribute without taking out this high? Now, what does the 10 a.m. candle do in this case? It takes out this previous high, creates an SMT, taps into a higher time frame for value gap, and has that CISD on the lower time frame. Now that's a proper manipulation, and that's when I can say the candle 2 is formed, right? And so when you see this 10 a.m. candle closure like this, you can expect the 2 p.m. candle, right, the next 4-hour candle, to do what? To act as the distribution candle. You get what I mean? So I want to carefully say this so I don't confuse, but it's whatever candle, right, that is, so the candle 2 is always going to be the candle that manipulates to the high of day, right? And after candle 2, you're always going to anticipate what? A distribution. So your highest probability candle will always be candle 3. But of course, you can trade candle 2. It'll just be, trading that reversal rather than that continuation. You guys get what I mean? Hopefully that makes sense. On cue, does that make sense? Because there's, of course, different aspects to this where, you can combine candle 1, candle 2, candle 3 with daily profiles and protraction profiles, right? Um, and that kind of makes it easier to understand because this, actually, I'm not going to talk about that because that's just going to fully confuse talking about something, people don't kind of know. But, my mentorship student right here, Jose, he knows that where, the protraction profiles can tie into these concepts. And of course, just like how we trade the 10 AMD model, right, that ties back into the MMXM second stage of distribution, and that ties back into trading that candle 3 on the 10 candle. So if we look at this right here, why did I say the 10 candle was going to distribute? Why? I said it because what does the 6 a.m. candle do? The 6 a.m. candle on ES takes out this high, forms the SMT. I see that higher time frame, candle body closure, right? I see that higher time frame candle body closure. We have an SMT. We swept out that external, range of liquidity, which is a higher time frame PD array, and that confirms that this is going to be the high of day, at least for the session, right? So, at this point, I had that expectation that, the 15-minute candle should distribute towards its drawn liquidity. Now, because we're trading intraday and not the higher time frame, if we have this, 4-hour for value gap resting up here, we could continue higher. But when we're trading intraday, we have to see time in a way where, it aligns with our time frames. So we're not going to be like, wait for the 4-hour candle close and then, trade at like 3 p.m. It doesn't make sense, right? We have our time-based restrictions as well. So we trade intraday based on our restrictions. So we can scalp this little move right here with this SMT and all this and take that position lower. Now, I kind of am skipping too fast, but I mean, I see this significant closure here on ES. On NASDAQ, I like this here. We have that SMT at the highs. There's just a second stage of, we don't even have an SMT actually. But I don't mind taking this just because it's been like 30 minutes and we missed both our trades. But it's not a bad, it's not bad. We'll see if we get tapped in. See if we get stopped. Or does it just accumulate here? Seems like price is just accumulating. What time is it? 11:25. Okay, so we get stopped here based off an accumulation. I mean, there's probably a re-entry off this 5-minute SSD. Do we form an SMT? So I mean, there's a re-entry right here off that 5-minute SSD that I kind of missed. That would have probably played out. Let's see. Probably keep your stop loss above this rejection block. Target this. Want to see if this plays out. It does. I mean, it's not bad. It just accumulates here. Whatever. Move on to the next day. So it just, if I'm okay, I'm gonna be slower next time, so I don't really So what does price do here? It looks like we're disrespecting this weekly gap after this. So I mean, my drawn liquidity is clearly just continuing lower, and now you can apply that candle logic, right, till all the higher time frames as well. So what does price do here? So I'm gonna tie it back to the candle 1, candle 2, candle 3, right? Now you can clearly see, right, price sweeps out this high, right, into this internal range of liquidity. And what does ES do? It forms that SMT, right, like this. And we get a significant closure back into the range off that higher time frame PD rate. We have an SMT, and we have a change in the state of delivery on the aligned time frame, which is, the hourly chart. And now what does price tell me? So we combine all these concepts. So of course we want to go back into the external range of liquidity because we go from internal to external, right? That's one thing. Now if we go back up here, you can clearly see we have that same little trend. I don't know what happened here. But we have that same little trend of, okay, we swept out the accumulation high, right? So this is our candle 1. What does candle 2 do? Candle 2 sweeps out that, internal range of liquidity, taps into that internal range of liquidity, significant closure thing. So what am I anticipating this next daily candle to do? To completely distribute. So this becomes a high probability day. Especially, this is a Friday too. So this is a part of our weekly profiles as well, where I'm anticipating, that Thursday consolidation reversal and then that Friday to just distribute because, Thursday made that high of the week. As you can clearly see, or Monday, I guess. Monday didn't really do much here. I guess it just left its high, but you can clearly see Thursday has that significant closure down below. So I'd anticipate Friday to continue lower off a theory basis. So you could even just do something like this, right? On the daily time frame, you could literally just do something like this. If you're a swing trader, because it all applies, you just take that promotion block, 2R, boom, and it'll play out like 100%. But we are intraday trading, so we get a significant closure here. There's a 2 p.m. candle. Let's move to next day open. I guess I can't. Can I not go forward? I can't go forward? Oh my god. Okay. Like, is it just bugging out or what? This is disgusting. Let me switch over to TradingView. So, unfortunately, we have that. I just want to see if my thesis is correct then. So, what day are we on? April 14th. April 14th. So, yeah, what does price do here? We go for that external. I guess price is consolidating here, right? As we know, phase of market delivery, you don't actually know when price is going to distribute fully, right? But we do expand. We probably could catch some lower time. I just want to see. So low probability today, 9:30 opens up. All right, so we take this low out during London session. So because our drawn liquidity was this external, right? This would be a low probability day, and you can clearly see what does New York AM session does literally nothing, because our daily objective got taken out with this large range overnight. Your best trade setup would probably be some scalp during London session, like something like this. It's just disgusting. Well, this is Monday, I guess. Oh, so there was a bank holiday or something. The Friday wasn't even, what's it called? There was no Friday here. It's kind of weird. But yeah, so maybe that's the reason why we kind of consolidate here. But you can clearly see, right? We'll probably distribute to this low, like I mentioned. ES won't even be able to open up. Just see here if we form some SMT. We do form more SMT, right, on Thursday, April 21st, with this high here. We tap into a weekly gap. We do tap into a weekly gap, right? Right here. So you're just waiting. We get an inversion of this one. So you could clearly see the reaction off this weekly gap, which 100% confirms that we're gonna go lower. And it's the same process here, where 1, 2, 3, right? And we're in a consolidation here, so it's kind of tough to anticipate when the market's gonna distribute. You can just expect, what the market is gonna do. It's hard to say when the market will go, but you can apply the same concept here, where this is our candle 1, this is our candle 2 with SMT. We tap into that weekly fair value gap, significant closure. Next candle 3, highest probability day, right? Will just distribute lower, right? So let's see if we can actually take a trade here. We get this SysD. Let's see. Yeah, significant closure. Institutional order flow is clearly, bearish here. Let's forward. See if we tap into the internal. No, we don't. 6 p.m. So we go from internal to external. Right now I'm anticipating, this liquidity. And this is another example of 1, 2, 3, right? Where this is your candle 1, right? This is your candle 1 right here. Candle 2 taps in this gap. Let's see if there's an SMT. Is there an SMT? No SMT. I mean, it still distributes. Let's see YM actually. 1, 2, 3. There's no SMT there. Actually, there is an SMT at the 6 a.m. high, I think. Yeah, there is. So 1, 2, and then 3 here. It's better to just keep. Yeah, so there's an SMT here. So you're anticipating the 10 a.m. candle to distribute here as well. Because we have an internal SMT at these highs as well. So we tap into internal. I'd expect the 10 a.m. candle to just distribute. Because we go from internal to external. And just because we have this large range here, going for the weekly for value gap, we should just continue lower. Especially when you see, I mean, oops, I kind of spoiled it, but you can clearly see this candle body closure here. This candle closes so close to the bottom of the range, right? Where, you know, we're anticipating a large distribution. And like I mentioned on the higher time frame, that's what it is. Like candle 3 is a very violent distribution and the best day for us to, you know, take a trade. So, I mean, that's 9:45. We tap in that gap. I mean, it's going to be obvious we short from here. YM. SMT on YM. I mean, you could literally just... I can't even go all the way down. Are we serious? Oh my god, this is absolutely disgusting. But I mean, you know, on the lower time frame, you could just literally just do this as well. With that SMT rejected high. I mean, you can make the S like smaller. It's not even letting me go down on the lower time frame. Let me see if I can like minimize it lower. See, I mean, this CISD level, 30 minutes. Let's see, 30 minutes SDs. We form that SMT. Significant closures. I mean, you know, you take this. Let's see. Market. Does it not let me sell? Oh. I mean, just anticipating that push, right? Especially after these 10 a.m. candle. And we can see on the hard time frame. Do we form another SMT? I don't think we form any 4-hour SMT, but we form an hourly SMT possibly with this high here. I'm pretty sure. No, I guess we don't. But I mean, just the weakness is just so evident there. Where, you know, you're just anticipating price to keep pushing lower. And that's what price does. So these are the highest probability days, the candle 3s. And honestly, that's going to be a big thing I hope you guys learn from today's session. I apologize for it to, you know, being a very sketch, especially with this FX replay. My Tradeful, like the regular app that I use to backtest, my account, there's something wrong with my account. So, you know, I'm kind of dealing with, you know, that on the back end. I don't know what's going on. Like, it's kind of a bug with affiliate accounts, whatever. So I'm just on the free version of FX Replay. It's kind of terrible. But yeah, I mean, I feel like that mini lecture was pretty good. Like, what are your thoughts on that? I feel like, I mean, that candle 1, 2, 3 is, I would say, a little bit advanced to apply, right? But once you get the hang of it and just keep seeing it, like it's just all about repetition and practice and just programming your mind to see it. Because literally, for me, the way my brain works is when I see, like, I could see, you know, the internal and external snap of my fingers. I could see the 10 a.m. power of 3 playing out without even marking it out. All of these things are just ingrained in my brain, right? And I kind of do get a little bit excited and just, I think I have to work on myself as an educator to slow down a little bit, right? Just because, um, you know, I have to work on that. I see that. I have to reflect on that and get better at that. But what I'm teaching you guys is the real deal stuff, right? Um, and this is how I pretty much applied and just I've programmed my brain over the past like 3 years just to see all of this, right? Anticipating the best days of distribution, significant closures, internal to external. I'm pairing all of these together, right? And for me, when you understand all the concepts and then pair it together, it's like a snap of your fingers and then you see it clearly, right? And then you understand the um, you understand the direction of the market way clearer, right? So I try my best to, last week we went over, what did we go over last week? I'm forgetting, but we went over, I think, did we go over MMXM or phase of market delivery? Something like that, right? In one of the sessions in the past couple of weeks or whatever. And this connects to that because, like, and then it also connects to the 10 a.m. power of 3 because as we know, the 10 a.m. 4-hour candle is right here, is going to be that candle 3 all the time. Let's see if I can go down and fix this. So this 10 a.m. candle is going to be the, let's see if I can make this better. But you guys get what I mean, right? This 10 a.m. candle is the best candle to trade, right? Because it's that candle 3, right? And as you can clearly see of the example I just showed on the daily chart, these candle 3s tend to be the highest probability trades, and that's what we want to trade. And the 10 a.m. power of 3, if you guys think about it logically, is that, right? And a lot of people don't realize that, but the 10 a.m. power of 3 is that second stage of distribution, right, of that MMXM and then that candle 3, which in theory is the highest probability setup for every single day because it's already after the confirmation, right? You're already getting a confirmation. So that 10 a.m. power of 3 framework is just a continuation off that confirmation of the higher time frame. It's kind of confusing, but once you understand it, I'm telling you guys will be phenomenal. Easy. Quick question: how does the 10 a.m. candle leverage the 950 to 1010 macro? Now, a lot of people, right, they tend to put a lot of power into the macro timings. Me personally, right, I'm not that big on macros just because, right, in theory they make sense, right, where, towards the end of a candle's life cycle, we'll get a significant, distribution or expansion. Me personally, right, I don't really put into mind, macros, or I'm not like really focused on them. Now, of course, all macros are going to do are just clear up the direction towards the end of a life cycle of a candle. Now, that doesn't mean, right, that, like, for me, what I kind of find silly in macros is that, oh, in this 20 minutes, we're going to see this, right? And that confuses a lot of people where, when they don't see anything happen in that 950 to 1010 macro, they struggle. They're like, what should happen? The macro, what is the macro doing? I'd say the macros are more inconsistent than consistent. And you can clearly see, right, the past 2 weeks, maybe even the past, 1 to 2 months, more times than none, between 10 a.m. or between like the 950 to 10:30, we just accumulate, right? Just because of, the conditions right now. So everybody who's, making sure they trade it between 950 to 1010, they're just trading a chop, right? Me personally, I don't really focus on those 20 minutes and give myself a time-based restriction, right? I'd honestly say just like, avoid it. Just like, you don't have to like enclose your mind that, oh, a lot of, like, I'm telling you, a lot of people when they learn macros, they're like, I need to take a trade between 950 and 1010. That's not the case. More often than not, the 950, like, to 10-10 macro will, of course, it might have some expansion some days. It might have that distribution, but what we want to focus on is the higher time frame, because the higher time frame is going to tell you when you're going to distribute, right? When you see an internal SMT here, like this is like, let's see if there's an SMT here. I think there was, right? Yeah. So this is how you're going to know when you're actually going to distribute, right? When you use candle 2s and candle 3s, right? The 1050 macro or the 950 macro won't tell you when you're going to distribute. It's going to be the signature of reversals, right? It's going to be, you get that SMT, you get that SSD, and then you can expect the next 1 hour candle to distribute, right? And then on the lower time frame, you engage it fractally, right? With our model, you see that for value gap, SSD, SMT on the lower time frame. 1050 macro won't tell, or the macros won't tell you what time you're going to distribute. It's all going to be signatures of reversals, right? I don't really believe in macros like that. A lot of people do. Me personally, I just say avoid them. Focus on candle 1, candle 2, candle 3. Look for those SMTs on the hourly and the 4-hour chart. Position yourselves with those SMTs, and I'm telling you, that will be the biggest thing in your trading. Biggest thing. So yeah, hope that kind of makes sense. A lot of people do hype up macros, but they're not. I'd say, for me, the higher time frame is king. It's all about understanding where the market's going to go. If you know where the market on the higher time frame is heading towards the drawn liquidity, you will make a lot of money. It's as simple as that. So yeah. Any other questions? So it has been an hour. There's no other questions. On cue, Jose. I just see we have another welcome, Jamshed. Looking forward to the recording. Of course, I'm going to post that ASAP. I'm going to snip it up and actually post a YouTube video on these candles as well. I feel like it was kind of educational, and yeah, so not bad. So yeah, I'll hit you a DM of some info I saw in a video. Okay, sure. Send me a DM, brother. So yeah, I mean, if there's no other questions, I'll see you guys on Tuesday. I hope none of you guys trade tomorrow, like I mentioned. I think the stock market's open tomorrow. I know the bond market's not open, or the bond market is open to or not open tomorrow, or it might be